we call it an asset-light program where we
Okay.
were selling down we had two major drivers of our earnings. One was from real estate that we own, hotels,
Yep.
and the other was from management and franchising hotels across the world. We're primarily a management business, not a franchise business, but that those are the two businesses. So as we sell down real estate, the proportion that's coming from real estate sourced earnings has been dropping. We've concurrently reinvested in buying new platforms and new brands over the last 5 years, and that has driven up our management and franchising fees at the same time. So the mix has shifted to much more in the management and franchise fee driven business, which is very low capital intensity and high margin and high free cash flow conversion. So that was probably the key message. The other thing that we did is we simplified our financial presentation because we have a business that's a subscription model membership business called Unlimited Vacation Club. And we sold the majority interest in that business to a third party, which helped us simplify how we report our earnings. And that was very well received by investors.
So, Mark, that's you in the C-suite managing all of that. What about the demand side of the business? What kind of pricing power do you have per room? And what's the demand situation like?
Actually, demand. So we think about three different demand drivers. One is leisure, which has been the leader of the recovery through post-COVID period. We think about group business, which is big meetings and conventions and things like that. And we also have business travel, individual business travel. All three are showing signs of great momentum and positive outlook. So starting with leisure, in the first quarter of this year, our pace, meaning our bookings, are up 11% for our all-inclusive resorts in the Caribbean and also up for our resorts in the Americas. But leisure travel has been really, really solid. In China, we had a record year for Lunar New Year. The spending amongst Chinese, both inside of China and to other destinations in Asia, was at an all-time high. So that's leisure. In group, our pace into this year, that is forward bookings, are up 8%. And so we're looking at another solid year of growth in meetings. And I think corporations are increasingly resolved to make sure that they prioritize those meetings. And then on business transient, the U.S. is lagging, but the overall business transient category demand around the world is about 7% below where it was pre-pandemic. So we're getting closer and closer to being at parity. Europe is fully recovered and then some. China is fully recovered and then some. The United States is still lagging. So, and we're seeing signs of positive signs of business transient travel increasing. So I would say across all three major categories, we're seeing positive trends into 24.
Mark, could you talk to us about M&A and kind of growth via acquisition? How does that figure into your growth plans? What are you guys messaging to the street about your willingness to engage in M&A? Because I know you had a buyout recently of the Apple Leisure Group. I want to see kind of what your appetite is going forward.
Yeah. So over the past 5 years, we've invested about $3.8 billion in acquisitions. The biggest one being Apple Leisure Group at $2.7 billion. And it's been tremendously beneficial to us because we've been able to expand our customer base in the highest growth and most relevant to us categories, which is leisure, lifestyle, and luxury. And so we've really done this in a very deliberate way to move the company in that direction. In the fourth quarter, I think we had 57% of our total rooms revenue around the world was leisure focused, which is up 20 points from the mid-30s to the mid-50s pre-pandemic till now. So the mix in the company has tremendously shifted. But they've also been very profitable and high value acquisitions. The fees per room that we are earning today are materially higher than they were 5 years ago before we made these acquisitions and evolved the company, even as we have grown our select service brands. So we are expanding in lower price points, but our overall fee growth per room has been growing, which is really, I think, part of the equation of actually driving shareholder value on an accelerated basis.